And welcome to another episode of Daily Market Mastery with me, Rauchenwald. On this Thursday afternoon, markets will open in 3 minutes, and we're about to take a look at my portfolio, my positions, and what I plan to adjust in the future, and where I think certain stocks and other assets are moving. Now, before we get to that, as always, two things. First, everything I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And second, all the tools that I'm using, so the charting software, the broker, the strategy I'm following, and so on, everything is linked in the description down below. And one thing that I recommend you use is that you actually check out the Elliott Wave principle, which you can read online for free if you use the link in the description down below or get yourself a physical copy. Now, with that said, why is the overlay not working? There it is, yeah. With that said, we can actually jump directly into my account here. And as we can see, we're starting off with a slightly green day. My $30 GameStop calls that we sold for this week are around 2/3 of the maximum profit. So yeah, we could theoretically buy them back, but I probably will set an order and to buy them back tomorrow for $1. So to close them out before the markets close and then sell new calls for next week. Yeah, with that, let's actually jump and look at GameStop. And there we still crap a little bit sideways. As said, in my opinion, we might or should actually get another push further down, potentially in the $15 range. Not that it makes sense considering the fundamentals, so the $4 billion cash on hand and that GameStop is profitable compared to other stocks that have similar numbers. But that's simply what the pattern would suggest, that there would be another push downwards first before we continue our journey up. However, it's also possible that I'm wrong here and that we actually will just continue our journey up from here. Now, let's take a look at Novavax, where right now we're still waiting for a breakout from the channel for our call option to actually, or for my analysis to be right. If that breakout were to happen, it would confirm that, or most likely confirm that we have an ABC pattern that finished here. Fell slightly short of the 61.8 retracement, but reached the minimum target for a wave C, considering if that could be wave A, wave B, and wave C. And in that case, our profit targets would be set up here, and our call option would pay out at a roughly 10-to-1 ratio. Maybe even better, depending on how far we go, if we only reach the minimum target or the projected minimum target or the actual target. Now, with that, Barnes & Noble Educational still crabbing slightly upwards and sideways. Remains to be seen, as said, if that was the end of the correction and we are going up from here. It would point that way, but there still has to be a little bit more movement. So it's going to take weeks, if not months, for us to clearly see if we now have a valid Elliott Wave pattern in that stock or not. Yeah, then Grab has or had earning reports. I think has upcoming or had them today. There has been some movement. I think today's earnings might be helpful to either break to the bottom and maybe invalidate our current assumption that this is wave 1, 2, and we're in the progress of building up to wave 3. Or break to the top to confirm that it's actually the case. Here we have a LEAPS option, so that expires in 2026. So we still have a lot of time for it to actually play out. So no hurry here. And we're looking at a weekly chart. So yeah, like it takes time for things to develop on the chart anyway. Green Wave, still same thing. We are waiting for something to happen, something positive to happen. Obviously, stock was very stable in that area despite huge short interest, and then just took a dump here. Yeah, position is relatively small, so we're just gonna hold on either for it to recover or for it to eventually turn into a write-off. Yeah, Immersion still crabbing a little bit sideways. As said, right now my assumption would be that we finished our wave 4 here, even though that doesn't look like a super nice ABC pattern because we retraced almost 100% here on the upside. Yeah, like that C leg seems a little long then, but we trace pretty much to the top of the base channel and seem to bounce there quite steadily. So I'm still gonna hold on to the opinion, or still gonna stick with my opinion that this is actually wave 4 potentially finished, and we'll get wave 5 in the nearish future. No, we already got out here. We left it a little bit below here. We could have gotten a better exit, maybe even a break-even exit, but we only lost around $50 or so on the trade, so it's not the end of the world. But I said I think that we'll get to see a push below here that would invalidate this pattern, at least this short-term pattern. The long-term pattern would only get invalidated at the 10 cent value or mark. Cost still around the $7 mark. Yeah, auto labeling suggests that wave 4 might have finished here. Possible 1, 2, 3, 4, 5. So I think there might be a little bit for a push further down, maybe to the $6 range. Potentially worst case to the $5 range. Below $5, I would consider taking the loss. As long as we stay above the $5 mark. However, I think that we might just still be in this ABC correction before we then get our next push further up. Nvidia probably recovering more than expected. Yeah, so we are as said. Under the assumption that this is not an ABC correction, but that this is actually an impulse wave, or in that case a leading diagonal downwards, which would then be wave 1 of a bigger impulse wave. We basically broke out from the so-called acceleration channel, and we can add our deceleration trend line here by combining those 2 points, either those 2 or those 2. And we basically would wait for it to go break out from here again. Technically, there is more upside possible. The pattern becomes invalid if or when we cross, or just a second here, if or when we cross the 137.32. If we cross those, then likely that was the entire correction and we're in 5 waves up, so one could then enter here again. I know it seems like a missed opportunity in that case. Right now, however, would still, if I would not have all my capital tied up, rather buy puts and bet on a decline. SunPower, same as or similar to Greenwave, we are waiting for some kind of positive news to turn that ship around. Other than that, that position will, I mean, it's already going to be a long-term hold, but other than that, it might turn to a write-off of a couple $100, so not the end of the world. And SPY also recovering way more than expected. As said, I expected a turnaround here. Auto labeling suggests wave 1 and wave 2 like this. Personally, I mean, where do we have the 1618 target? Yeah, up here. While it's possible, I don't necessarily like it. So I don't fully agree with this 1, 2, 3, 4, 5. I think it's more likely that we would have 1, 2, 3, and this is now wave 4. And that would again be a leading diagonal that becomes invalid if we go above the 554.87. So yeah, it points towards me being wrong, to be honest. There's still wiggle room to be right, but considering how long that push here now has been, it's really points towards this being ABC and this being 1, 2, 3 in progress, 4, 5. Same thing like with Nvidia. If we were to go above the 554.87, then it definitely is ABC, and we have 5 waves up, which means one could then go long. However, one has to consider how far wave 3 might go, then we get a wave 4, and then we get a wave 5. So, but the point still stands that if we break the 554.87, then there should be overall a higher target still available that we are then maybe with a short decline first reach. Yeah, PD or not PD, but I really thought that we would have the beginning of a stronger downward movement here, considering how this developed. Still possible, as said. Last target line for wave C would be at 553.62. Doesn't mean that we have to reach it, but again, possible that we go there. So it's a very slim line between the maximum target for wave C and the point where the wave pattern would become invalid. Mass spectrometer, welcome to the stream. Yeah, I'm not fully convinced yet. So it points that way. Yeah, it really points that way. But if I consider the overall pattern, so the issue that I'm having is that the decline that we had here seems to me too much to just be a correction of this pattern. Yeah? So I mean, it's within reason. We don't fully. I mean, maybe let's measure again. It's always hard to keep everything in my, so like to recall everything from the top of my head. Okay, I actually stand corrected. Either I forgot that somehow or I missed it. Maybe I was too focused on this part or so, yeah. So yeah, let's zoom out a little bit so you actually can see the retracement levels better. So like this. We actually bounce exactly at the 78.6 retracement level, yeah. And so very often when we correct an impulsive wave in Elliott wave theory, very often we will bounce at, so the correction will go to the 38.2, 50, 61.8, and in some cases the 78.6 level. And while not, so those are not certainties that always happen, but often enough that we can use them as like like entry points, exit points, and so on. And here we actually bounced exactly at the 78.6. Yeah. So while visually to me, that decline looks like it declined more than it's supposed to be. Based on the retracement level, it actually would point towards we're just correcting this wave right now, or we just corrected this wave and bounced from the 78.6 level almost on the dot. And that would then point towards getting 5 new waves upwards. However, since we're already that close, I personally would still wait if we break the 554.87, because then the prediction or the analysis or the pattern that we are here in a 1, 2, 3, 4, 5 downwards movement definitely becomes invalid. And since we're already like roughly 1% move away from that line, that seems like the smarter thing to do here. Yeah. Overall, let's zoom out a little bit. Yeah, like I don't know. I thought that we would either correct this pattern here, which would then be that we at least get another push potentially in this area, or that we potentially might be correcting this pattern here, which would then point towards getting an even bigger push downwards. Yeah. Calling for rate cuts too. Banks are running. Yeah. Yeah, I'm not saying that it's not possible. And just, like it's always hard, like when you have your, I mean, yeah, I'm not going to say mind made up, but when you have an opinion about something and you made your analysis, maybe with missing something or overlooking some things, yeah, it's then always hard or takes a step or two to walk away from that opinion. Yeah? I mean, nobody is always right, but yeah, probably. I mean, yeah. So, God, yeah. Like, how did I miss that? Like, where are we here? So, probably exactly. Or did we go further here? We probably went further. No, we didn't. Yeah. Ah, come on. Actually, both, yeah. So somehow I missed that. So because also here, so when we have an A, B, C corrective pattern, very often wave C will terminate and then turn around, basically. So terminate, and then we have the next impulsive pattern at the 100% mark, but the maximum target, or most likely maximum target, is the 161.8 expansion level. And even here, we bounce exactly on that level, yeah. So yeah, I stand corrected. So somehow I missed that. So if we consider that on one hand, we traced exactly 78.6% of this impulsive pattern, and on the other hand, our, zoom too far. On the other hand, our wave C exactly bounces, or pretty much exactly bounces, on the 161.8 expansion of the wave A. It really is more likely that we are looking at an A, B, C pattern here, and that actually are the next 5 waves that we are getting upwards. Yeah, luckily I didn't get bit because my funds are all tied up in other positions. Yeah. Sorry to hear that you got caught here. So, but oh, come on, finish loading. I have to say, for me, one of the issues that I'm having is that I'm at the moment only, you mean here, yeah, at 5:20-ish, yeah. So at the moment, I only have around like, let's say 15 to 30 minutes per day that I'm dedicating to the charts in general and to managing my portfolio, which then also sometimes leads to rushing through the different stocks and indices without taking the time to zoom out again and see how it affects the bigger picture. Yeah, not that far. So now please, again, I pushed the wrong wheel. God. Yeah, I love Motive Wave. I really love it, but yeah, human error. Push the mouse wheel in the wrong direction to zoom out further. So getting it to load more data. In my opinion, we should eventually correct this entire thing here, as said. Yeah. So, and I mean, even if that, do we get even more ups? I mean, it just doesn't make sense to me. Like, there are so many unprofitable businesses. Yeah. So, like, yeah, like the whole, let's call it world economy situation doesn't make sense to me, how stocks can just rise and rise and rise further. Oh, come on, finish loading, please. Yeah. Hi, Akashi. Yeah. Yeah, human error. Yeah. I'm not gonna say which human, but yeah, definitely human error. So we can blame it on somebody. Yeah, it is. It's insane. It's like, I don't know. Like, it's in general. Like, I really expect like a big crash. And then also, if we think about the last banking crisis that actually, so with the Silicon Valley Bank and so on, where a few banks go broke, and actually the amount of money involved is bigger than in the 2008 banking crisis, but it hardly makes a dent on the charts in comparison. It seems everything is so I don't know, like, so artificial at the moment. Yeah. So, and I think also, like, so I definitely have a bearish bias at the moment, or at the moment for the last year already. And sometimes that then gets me caught up in positions I shouldn't be in. Sometimes it pays off well and so on. Yeah. But yeah, in this case, I clearly overlooked the bigger picture. Now, please finish loading so that we can consider the alternatives. So now let's push the mouse wheel forward. Okay, I'm giving up. Oh my God. Yeah. Someday I'm gonna remember which way is zooming in and which way is zooming out in the, yeah, someday. It's not like I haven't been using Motive Wave for years already. Yeah. Okay, let's take a look at the Nasdaq in the meantime. So I mean, it's not gonna finish loading then. So where we probably don't have the same picture. Yeah, I think it's a massive bubble. Like, that question is, so, and when it's gonna burst. Yeah. So are you also not loading? Come on, I mean, seriously. Well, do we get data here? So I killed it. Yeah. So zoomed one time too many or one time too much. Yeah, it's, I don't, until this day, I don't fully understand. So if I wait, backwards is zooming in. Okay, let's try to remember that. So I don't fully understand how much data it loads. If it just, for me, it seems like I don't understand why it's taking forever sometimes, because it should only load basically the high, low, open, close volume. So like a few data points per candle. So even if there's 100 candles, it shouldn't take forever. Yeah. Yeah. So in the NASDAQ, or in that case, E-mini NASDAQ 100, yeah. Similar situation, but probably maybe that got me, so it's like hard to recall, but maybe that got me to get more on the bearish side, because here, while we also bounce theoretically on the 78.6 level, we spike way further through it. So we almost retrace 100% of this movement. But still, same situation. Technically, we bounce here. Probably going to be a similar situation in terms of the, so I'm not going to zoom in so we avoid the loading, or I'm not going to switch the time frame. Yeah, so wave A, wave B, wave C bounces at the 100% expansion level. So we're likely also here in the next 5 waves up. So now let's actually zoom in a little bit. Yeah, so okay, so then here in the NASDAQ, the next profit target would potentially be either right now, but seems like we're breaking through, and the next profit target would be the 20,374 to 20,702 for a potential wave 1, wave 2, and wave 3. We can also use Kennedy channeling technique here, although we don't have much to see right now other than a potential base channel. So if we put that here, then we're still within the base channel. So, but based on the corrective pattern, based on what we saw in SPY, I assume it's going to be the same here. So ABC correction, although I assumed it first otherwise. And now we get our next impulse wave pattern. So 1, 2, 3, most likely to turn around at the 2618 extension level. Then we get our wave 4, and then we get our wave 5, and then we're probably at 21,000 in the NASDAQ. How, I have no idea, but yeah, that's what the pattern looks like now. Now, if we circle back, there it's still loading. Okay, well, oh no, now it's finished. Okay, now moving backwards is zooming in. Okay, so which means we can now do the same here. So sadly, I'll have to throw my bearish tendencies here overboard, and which means we get an extension for what most likely is the current wave 1-2 pattern, and we get the next profit targets here at 566 to 572. Yep. So pretty much same opinion, yeah. So it's interesting. So I'm not sure if you're using Elliott Wave Theory and so on or not, but it's interesting to me. Here we, by the way, are already out of the base channel, which would be confirmation that we are in a third wave. So, I mean, there's still a chance of a retest, but very likely we're in a third wave. And that very often the third wave ends at 238.2, 261.8 extension level. In rare cases, it doesn't make it that far, and only is the 1618 level. And in some cases, it shoots through and we see the next levels. But it's surprising how accurate or how often those levels are actually marking the end of a third wave. Then we get wave 4, and then we get our 5th wave. Yeah, so a pity. Yeah, like I really don't understand how it can keep going higher and higher. And technically, the pattern will only be completely confirmed in quotes once we break the 554.87 as mentioned, because then this cannot be 1, 2, 3, 4 anymore. It's then impossible. So it would break the rules. But considering the movement we already had here, considering what I overlooked, that we exactly retraced to the 78.6 retracement level of the previous impulsive pattern, and considering that this movement here exactly turns around at the 161.8 expansion level for an ABC pattern here, it's most likely that we are indeed now already in the next impulsive wave up. Yeah. I mean, to be fair, I mean, I'm also following the news, but the whole idea of Elliott Wave Theory, and it has proven to be fairly reliable to me personally, yeah, is that, in quotes, the news don't matter, yeah. So, or I mean, they obviously matter, but they just happen to be very often when you'd actually expect a movement based on Elliott Wave Theory, yeah. So I'm trying not to pay too much attention to the news unless there are multiple I mean, at almost any given time. Right now, it's still possible that this is somehow 1, 2, 3, 4 as a leading diagonal, and we'll get wave 5 down. So I said it only becomes invalid if we break that high here. And on the other hand, it's possible that, and more likely, that we have A, B, C, considering how exactly we turned around at specific levels, and then we have 1, 2, 3, 4, 5 in development. So wave 3 here in development, yeah. So so their news are obviously then relevant because they would give you an idea and say, okay, it's a more bullish outlook, so therefore the variant that points upwards is more likely. But on the other hand, at this price level where we're that close to anyway invalidating the other pattern, even without news, it just becomes the more likely scenario, yeah. But yeah, would have got burned here if my funds wouldn't have been tied up anyway already. Yeah? So, and again, like just wondering how the fuck. But then the question would be about NVIDIA as well. So yeah, the thing there is, you know, that I mean, yeah, I mean there it's even worse, yeah. So oh god, yeah. Oh, okay, so considering that I believe that we're in a quite fairly big bubble, I also believe that when it bursts, it will burst quite rapidly, or like at least the initial drop might be quite substantial. Yeah, same thing here, yeah. So don't know how, but looks like NVIDIA is also set to make another journey upwards. And it's going to be the exact same picture. To 134, 139. Yeah, it's like the .com crash, but I just feel it feels like it's bigger. I mean, NVIDIA is just so grossly overvalued at this point in time, at least in my opinion, yeah. Just seems ridiculous, yeah. So that seems steep. Probably not correct. Probably like this. That the fifth. No, like there we have the ABC down. So yeah. I mean the movement is just insane. Yeah, like that's just insane. So like any reasonable correction should take us down to, I don't know, here, yeah, at least. So roughly eyeballing it, yeah. Actually here the $75 mark would be a good termination point for correcting, but it's not, or it doesn't look like it's going to happen. So it looks like we have again a perfect ABC, although I really, yeah, I mean, we terminate around the maximum target for wave C. We also technically, if we look on a daily chart, then we only have a wick going down here, but technically turn around at the 61.8 retracement. So everything here also points towards 5 more waves going upwards. And yeah, like I don't know how, like it just doesn't make sense to me, but apparently we are in for more upside in NVIDIA, in SPY, and in the NASDAQ. Question is going to be, so if we circle back, but do we get data? Yeah, so, and if we zoom out, yeah. I really thought that here, even on the monthly chart, that we already have our 1, 2, 3, 4, and that's the end of wave 5. So that we would be correcting this, which would bring us down at least to 14 to 16,000 points. So in this area here. But as we see, it turns out that we first get another push up, and which means technically this wave here weekly. So 1, 1, 2, 3, 4, 5. So here from October. It just doesn't. So I'm having a hard time labeling this unless, so if the whole pattern here is finished and this is indeed A, B, and we get our C crash down, then it makes sense to me visually. But if we now are really about to get another 5-wave push up, then I just have a hard time with that drop, because it's like, it's not, or it actually might be big enough to correct this movement here, but technically we should correct 1, 2, 3, 4, and 5. So we should correct this entire movement. And again, then that's not enough. Yeah. Like, yeah, so the zoomed out, it doesn't make sense, and it should correct more in my opinion. Unless that's 1, 2, 3, 4, 5. Then it would make sense, but then I don't see how we can get another 5 waves all the way further up. I mean, that would just be insane, yeah. So it's like a split decision. On one hand, we bounce on the 2618 expansion level to point towards 1, 2, 3, 4. On the other hand, we also bounce on the 3618 to point towards 1, 2, 3, 4. But if that would be area 4, then that correction would be sufficient, and we would have corrected this pattern here, although, I mean, sufficient in quotes. The bounce lines up with strong support in this one. Yeah, I mean, it's like, no, that's like the 16th. Oh God. Zoom out, gentle. Yeah. I don't know which bounce you mean. I mean, here, at least on the weekly chart, it's not really like we had anything here as a support level. And yeah, like there, we're still 1,000 points or 1,000 points off to even consider that level here, but it also doesn't look like super strong. We had the top here, and yeah, like, so I'm having mixed feelings. On one hand, I expect, or I would actually expect a bigger correction. On the other hand, the pattern now after zooming out and taking a closer look, looks more likely. So here as well. So instead of this, we likely have wave A down here, wave B down here, and wave C down here. So for ABC, and now have the upside of not expansion but extension. Our next wave 1, 2, and 3 to the 20,000 mark here. Yeah. Bounce at the beginning. Okay, now to zoom out again. Weekly. In here, so like this one, it's like annoying with the potential delay of the stream, but there, yeah, there, like I can imagine you're sitting at your screen and you're pointing into it and saying there, yeah, like, I don't know, actually, like, so like, I mean, time flies. Like, actually 3 years ago, I actually thought that this would be the beginning of a bigger correction. So wave A, wave B, and that we'll get our wave C from roughly from the 15,000 mark down. And then that looked promising, and then all of this mess here showed up. And now the alternative is, so again, following Elliott Wave Theory, there should be 5 waves up here, but I'm having a hard time then reconciling that there will be another push. And we bounce at every level. We bounce at the 2618, we bounce at the 3618, and we bounce at the, okay, not 4618, but the 4382. And so it's really, is this 1, 2, 3? So is wave 3 from here to here, from here to here, or is wave 3 maybe from here to here? That might be the variant that maybe makes sense. If wave 3 really is that far, then we have now a wave 4 and still get our wave 5, maybe. So if wave 3 would really be that big, and that's our entire wave 4, then our wave 5 target is going to be off the charts. Yeah, so like, yeah, shoot me. Like, yeah, you know, like I didn't see a 5-way push possible in quotes here. Yeah, I mean, back then NVIDIA wasn't that overvalued, but still, I don't know, like, yeah, like I'm missing something, and it's just gonna be lean back and see. What do you mean 600? There wouldn't be so many weirdos on the internet, then it would actually be nice to have a Discord voice chat to cut down on the response times. Ah, you mean it, huh? What, where? I'm not following right now. I think we already agreed that SPY would have wave 3 here. So like, or the next target, you also shared 560, 570. And the extension levels would point towards 566 to 572. Ah, no, that definitely. So if we have a wave 3 here, we get a wave 4, and then we get a wave 5. And depending on, so if that's like, let's say we terminate here, and then show the median. So wave 4 very often retraces to the top, the median, or the bottom. Yeah, so even if we retrace to the bottom, then we would have the minimum target for wave 5 of 580 and the maximum target at 500 at 600. And if we only touch the top of the channel, then we can see 600 to 623. So as wave 5 target areas. Yeah, obviously then somewhere back dragged out. So basically 3, then 4, but yeah, let's take the median. So even then, 590 is 615. Yeah, so for wave 5 target. And it's the only thing that makes sense. So based on Elliott Wave Theory, because like if this is an ABC corrective pattern, then we need to have either then that would be potentially the last wave before the crash in quotes, or correction, or whatever we want to call it. And so it would either be an impulse wave or an ending diagonal, and both divide in 5 waves. So impulse would be 1, 2, 3, 4, 5, where wave 4 cannot go into this area here, so it has to stay above this point 1. And ending diagonal would just subdivide differently in 3 waves, 3 waves. So everything would be subdivided in 3 waves, and wave 4 would enter the territory. But even then, so even if we go down here, we see that the wave 5 target areas are still close to the 600 mark, or close enough. So yeah, I also consider it like insanity. That's why actually, yeah, like figured, okay, that might be the beginning of 1, 2, 3, 4, 5 to start our journey downwards for a little bit at least. But it looks like right now it looks different. Again, like technically still possible, but we're talking about like a 5-point move, so 1% move to invalidate that variation. So yeah. Anyway, so unfortunately, I'm gonna have to call it a day. Still have a few other things on my to-do list for today. Yeah, it's gonna be interesting to watch. I mean, it's sad that I overlooked the potential patterns in SPY, NVIDIA, and NASDAQ because I was so focused on my bearish bias that this might be the beginning of the downward trend. But I stand corrected. As said, it looks more likely that our target areas are now here, at least for wave 3, and then we get our wave 4 and our wave 5. And we're gonna just keep an eye on it during the next couple of days and weeks and see how it develops. And yeah, then keep an eye for the potential next correction. 1 second. No, okay, I thought I have to sneeze. Anyway, yeah, thank you, Mass Spectrometer, for stopping by and for interacting a little bit. I appreciate the input. And yeah, good luck to both of us. Hopefully you don't get burned next time when you think, or when you think it's going down. Akashi also, I pointed my screen returning, you can see it too. Okay, great. Yeah. Yeah, Akashi, also thanks for stopping by, and all the lurkers also thanks for stopping by. I hope you all have a great day, and then see you all likely tomorrow again around 5 minutes before market opens for another episode of Daily Market Mastery. Thanks for stopping by. Don't forget, like, subscribe, enable notifications, and with that, see you